Hello, everybody. It's Sunday, live Q&A time. Day, I should say, year 4.5 of microphone trials and tribulations. Let me know if the sound is good, bad, or indifferent. I'm trying not to talk too close to the mic. Some people tell me to swallow it. Other people say, no, you're too close. Anyway, hello, California. Hello, Australia. Hello, UK. Hello, Spain. Thank you all for coming. Let's get into the story. This is going to be called a rotation storm. So much questions about supply crunches, quantum, a lot of the usual stuff. People are worried, is it going to be an old season or not? What do we do? Do we rotate? Do we play the AI game now? So I'll try help people get a feel for exactly where we are, where we're going, and what data we can look at. I'll make sure my phone is off so it doesn't vibrate the whole time. Sound is good. Thank you, Craig, for letting me know. I'm blind, literally, in many ways. So let's get into the story. And thank you all for coming. And thank you to the Moz Chat, TSLA, Sean Donnelly, K8, and everybody else. And disclaimer, not financial advice, just a guy on the internet. Let's get into, and all the questions come from Patreon. Never forget that. First question is from Joro. If institutions and sovereign wealth funds buy Bitcoin without intending to ever sell, causing a supply crunch due to a scarcity, could Bitcoin's price surge significantly but face challenges from low liquidity, ironically making scarcity its downfall? What's your take on this scenario and how it may play out? This is a very good, deep question, and I like the way you think. Always look around the corners, everybody. One thing I did touch on yesterday, which is kind of pertinent, is the OTC desks did crash 113,000 Bitcoin in 3.5 weeks. That means their supply was halved. What's interesting about this number is if this halves again, i.e. if the same amount of pull from the OTC desks repeats over the next month, there is nothing left on the OTC desks. And that means people like Michael Saylor are going to have to go to market to buy Bitcoin. That means go to Coinbase, go to Binance, all these other places. And the question is, will they have it? And the other question is, what will happen to price? So I do believe there is a possibility of a supply crunch. We just don't know when. But there's some other factors to consider as well that are very important. First of all, Bitcoin scarcity, I don't believe it does pose an issue. And I remember an old story, and people, a friend of mine used to buy secondhand cars and sell secondhand cars. And he said, every car has a buyer. And I understood this, but also the corollary of this is also true. Every asset holder has a price at which they will sell. And there's also always somebody that will pay any price to get access to this asset. So taking that into account, I do believe there's a couple of things. One, even though there's 21 million coins and probably 5 million are lost, it does not pose an issue for market functionality because Bitcoin has extremely high liquidity, 24/7 operation, millions of participants, market makers, etc. And everybody will always need a lifestyle chip. And as the price goes up, people will sell and take profits and buy their farm or buy their kids' education or buy the house of their dreams or a boat or whatever else. And yes, institutions hoarding is fascinating to me because we know Saylor will never sell. And every time he buys, he denies whole coinership. Remember that. But historical and empirical evidence suggests that the market will be resilient, just like other assets. And you know, again, every car has a buyer. Remember that. So thank you for that question. Not concerned. And that's, by the way, there's a lot of people that have these really crazy price predictions like $13 million Bitcoin and $1 billion Bitcoin. Well, as fiat goes to zero, Bitcoin's going to go up. In fact, it's up this morning. Let's check on the real-time price. Bitcoin's 106,400. We got away from, jump out for this one. We're out of the $105,000 hell. Keep it up. Thank you for the good juju, everybody. But let's get back to the story. More questions. Bitcoin is fascinating. And I've never been more bullish or excited about the asset in my life, too. Next question, Craig M. And we keep getting this, and people are concerned because the FUDsters are out all the time spreading fear. Remember, everybody, beware of media because fear sells. Okay, from Craig. Given that quantum computing threatens online security, including Bitcoin, what's the expected timeline for impact? and what progress is being made to counter it. Again, I'm going to spend very little time on this one. I'm going to turn off my camera, but please, everyone, please do not worry about quantum. Our top developer has talked about this for years and years. He said, no, we have nowhere near enough qubits to ever threaten Bitcoin, at least not for the next 8 to 10 years, maybe more. Remember, current quantum computers are very far from capable from breaking Bitcoin's SHA-256 or ECDSA cryptography. All right. And even the crazy advancements of quantum algorithms like Shor's require millions of stable qubits, which are decades away, ladies and gentlemen. Ignore the FUDsters out there. Now, the other important thing that we've said many times, I'll repeat it again, Bitcoin will be quantum proof by the time it matters. So if it's in 10 years or 8 years or 15 years, Bitcoin's developers will be implementing post-quantum cryptography upgrades, okay? These would be Lamport or Vinternets or whatever the hell they're called. I don't remember, but this will also align with global systems, because remember, if quantum computers get to the stage where they can crack Bitcoin, they'll have long dismantled RSA, ECC that's used in medical applications, financial applications, all banks, all stock exchanges, all governments, the CIA, the Pentagon. They will all be cleaned out, okay? And this universal vulnerability means global cybersecurity will prioritize quantum proofing of all systems, not at the very least Bitcoin, okay? So please, everybody, stop freaking out about this, okay? I hope I can put it to rest and never answer a question on quantum again. Let's go. But again, it's good to be paranoid. Next, from Illusions. Thanks to the IA team for sharing alpha every day. I have 2 children, ages 6 and 7, with long investment horizons. I recently sold their ETF holdings and moved the proceeds into beneficiary accounts so they can control it at 18, avoiding future sales or transfers. I allocated their funds equally between 2 holdings, 50% IBIT and 50% Tesla. Given their long-term investment timeline, is this allocation too concentrated or too risky? Should I diversify into 3 or 4 holdings for better risk management? Well, I like the way you think, and that will be life-changing for the kids. A couple of things, though. I know you said give it to them at 18. I think all children and 18-year-olds and 21-year-olds, etc., should learn to stand on their own 2 feet and make their own money. But maybe when they're 30, give it to them, but not before. Anyway, that's just my personal thing. I do want to say a couple of things. Remember, stress again, every asset can go to zero. Bitcoin can go to zero. Tesla can go to zero. Google can go to zero, etc. Never set it and forget it. Always keep an eye on the markets. Keep an eye on the assets. If you're playing with fire, keep your gloves on. All right, very important. Now, a couple of things I would suggest as well. And this is just a suggestion. 50-50 is a bit crude, but I have the proportion of my NVIDIA to my Tesla now is about equivalent to 1/10 NVIDIA, 9/10 Tesla. So maybe trim the Tesla down a little bit and get a little bit of NVIDIA. And I'll talk more about why as well, NVIDIA, in a little bit. And I'd add 5% of the top layer 1, which I'll talk about also in a little bit as well, and cut the Bitcoin down to 45%. Even though, by the way, sometimes you put a small amount of money on a little flyer of an investment and it becomes huge, okay? Even 1% or 5%, it can not only balance the portfolio, but also bring about incredible returns. So try and think about that too. So hope that helps. Thank you for the question, and good luck with the kids. Remember, make them work for their money. If you hand kids money, they won't appreciate it as much. So check out my rule of the day, rule du jour today as well. Next, move myself somewhere down here. Yes. First time Shawnee Bear has posted. Welcome to the family. There is increasing chatter that with Saylor ATMing and the sell pressure on Microstrategy to fund their new strategies like STRK, STRF MSTY, that the upside of MSTR is being suppressed versus the returns of Bitcoin. If I want to maintain my Bitcoin exposure, should one consider rotating, first rotation question, some to the Bitcoin ETFs from Microstrategy, or do you think that during a euphoric parabolic move, Microstrategy will still outperform? Not financial advice. Thanks you and your team. So this is a great question, and let's jump in and cover it. First of all, this is a visual on TradingView. Thank you, Ecoman27, of where we are right now. Just if you look at the top part of the chart, the red line, I made it thick red. That is 3x NAV Premium, and I'll explain all this in a second. Orange, yellow, depending on what you can see, is 2x NAV Premium, and blue is 1x NAV Premium. So, and down below, you have the amount of fully diluted. Let me make sure I can say this right. Purple is fully diluted MNAV, 1.91, and undiluted MNAV is 1.7. Okay, that's the important thing. I'm going to turn my camera off again for this one so you can see. Now, I drew a red line on the bottom piece. That represents an MNAV of 2, which means the value of the company is twice their Bitcoin holdings. And if you look at the history, just focus on the green line for a second, or even the purple line. Normally, MicroStrategy trades above this. And on the green side, we are below it right now, but we're perking up again. As Bitcoin gets more volatile, as the shorts pile into the trade during unvolatile periods, this is what we get ready for. A big squeeze, everybody. We like the squeezes. We like the volatility. And Saylor loves inviting the shorts to short him because vitality is volatility. And that's exactly what he's doing here. So let's go a little bit deeper. This is where we are right now at an MNAV of 1.7. It's historically on the low side. We'll probably be going higher. Will we get to 3x red line? I don't think so. That would mean MicroStrategy would be trading above $600. But let's look at this one. This is probably one of the most important slides of today for people to wrap their heads around MicroStrategy. And that is, the longer you hold, the more Satoshis per share you get, because Michael Saylor is using his currency, which is a stock, to buy Bitcoin at a discount because the stock is selling at a premium. But now they got 3 different preferred assets that are helping minimize the ATM, and they're going straight to preferred, and they're sometimes, perpetual preferred shares as well. Now, if you go back in time, I'll break this out in some numbers. The sats per share just over the last 9 months since September of 2024 is up 55%. Okay, MicroStrategy share price benefits from that because not only does the price of Bitcoin goes up, but so does the stock. And since my very first investment in MicroStrategy in 2020, in September 2020, the sats per share of my shares, which I still have some of the old ones, has gone up 8.4x since then. Okay, and the stock price has gone up 3,000% in this time frame, and it's been the top performing stock. The point I'm trying to make here is if MicroStrategy continue to accumulate Bitcoin, increasing their Bitcoin per share or Bitcoin yield, outperformance could persist. There is no guarantees in the future. If we get a nasty Bitcoin bear market, we could see MNAV go down to this blue line here, which would be brutal. And we got to watch that. So you got to balance the risk and reward. Would I sell my MicroStrategy and go into a Bitcoin ETF? No. Would I go into something else? Yes. And you all know what that is too. So right now, I still think there's, with all the treasuries that are happening, there's a lot of good still to come in this. And just watch the Satoshis per share accretion. As long as this red line, the slope keeps on looking vertical like this at 45 degrees, we are in good shape, everybody. Remember, Bitcoin is scarce. And hold tight. It's going to be a volatile ride. Now, next question is from NMudge. Hey, James and teams, thanks for everything you do. I'm 31 and about to get some cash from the sale of an investment property and improve my cash flow for investing by paying down some debt. With the current environment, should I hold off on stacking Tesla, MicroStrategy, Solana, Bitcoin, NVIDIA, etc. until things cool off a bit, or are we likely to continue seeing gains in the short term? For reference, I have a small portfolio with rough allocation, MicroStrategy, Tesla, Bitcoin, Solana, NVDA. That might be NVIDIA, I think. And I have the ISV to utilize. Okay, cool. This is a good start and an interesting portfolio as well. The second question, by the way, dovetails into the first. This is Nosy Salmon. Also, the first time they posted, and they both asked similar things with a slight twist. Thanks for all you do. I'm 36. I'm bipolar and not able to work. Though I have a few euros to spend monthly, I've managed to stack 360 Sol in the last bear. Woohoo! Good job. And about 9 shares of Tesla. I'm very fortunate to inherit a second house, which I can sell for approximately 300,000 euros minus expenses, or rent it out for some cash flow. But based on research, I would like to focus more on ASML, NVIDIA, Tesla, Microstrategy, Google, and of course, Bitcoin. Although I'm not sure of what good entry or exit points are, what would you do? NFA, obviously. Much regards and true fan. Thank you, Psych Experience. So these two questions are very, very important when it comes to building positions and timing the building of those positions. So what I'm going to do is try address both topics first. But I do want to say one thing though as well. You mentioned a disorder. I wouldn't call it a disorder. I know people who also have a bipolar condition, and they excel at investing due to their ability to think creatively and take calculated risks, especially during certain times, and also during very quiet times, have a very deep focus. And this combination can lead to unique insights and persistence and great investing results. So I think maybe you have found your speed. And I don't give financial advice here, but if you are already comfortable building positions and investing, sell the house. You won't get much rental income for it probably. But the next 2, 3, 4 years will be extraordinary in the markets, okay? And you've already built a very big bag of Solana, so well done on that too. But you are underweight in other assets. So what I'm going to do now for NMUJ and Psych Experience, let's look at the big macro picture. And again, this is not Bitcoin, this is stocks. A lot of the questions are around stocks. From Bloomberg, the top profit growers over the next 5 years. Number 1 on the list is Tesla. And this is from Bloomberg, by the way, it's TradFi. So take it with a grain of salt. But they could be right here. I believe they are right, because that's why I'm invested in Tesla and NVIDIA. NVIDIA is the number 2 profit grower over the next 5 years. Number 3 is Amazon, 4, Microsoft, Alphabet, number 5, Meta, 6, 7 is Apple. I think I would actually reorganize this list a little bit. Yes, Tesla top, NVIDIA number 2, but I wouldn't fade Meta. I think Meta has potential to do more than Microsoft and Amazon. And of course, Google, which I covered when I rebuilt the Mag 7. So let me check that video as well. It's pretty cool. So let's look at some charts and show you how to build a position. So you never deploy all in at a certain time, but you go in layers. So this is the ATR model, which is really very cool at identifying layers of when to get in and buy stuff. And sadly as well, over the last 6 or 8 weeks, we had the most killer opportunities to stack stuff. So there's always an opportunity to be had. So don't feel bad if you miss those opportunities. But here, this is NVIDIA. We had the killer opportunity, $88 in level 4, where I 5x'd my size of my NVIDIA position after being out of it for a couple of years. I got in 2022, the same week that Kathy Wood actually sold a big bag I coincidentally bought, and I didn't realize she sold, which I'm glad I didn't notice because that may have rattled me. Anyway, level 4 on the ATR, killer opportunity. And the reason I'm showing this is sometimes you can wait and be patient. These killer opportunities arise every 6 months, 9 months, or whatever. And there's always an opportunity to be had. MicroStrategy, killer opportunity, 250 in level 3. We had that back in April, middle of April, which is what, 6 weeks ago? And now it's 375, and it's going to go higher because Bitcoin's going higher as we speak. Level 3, Google under level 5, but I'm not a fan. I always say that Google should have owned AI. Instead, they were so afraid of cannibalizing their search business, they didn't, and now they're falling behind. They still have a lot of power under the hood. They have their own silicon. They have all the data on the planet. But I just fear that they might be going a little bit too slow. But here, if you do see Google under level 5, which would be approximately $160, yeah, it's a buy. And by the way, the trend is down right now, so it could dip a little bit. ASML 650. ASML, I know the Dutch people love it. I am not a big fan. I'd rather have NVIDIA, to be honest. Go for the group that makes most of the profit. But if you do have to buy, wait for under level 4. That means under about 650. Currently, it's about 760. And what else do we have in the box? Bitcoin. Wow, what a killer opportunity. We had Bitcoin at 75K again, the beginning of April, middle of April. Huge opportunity. People thought the bull market was over. They threw in the towel. They walked away. They packed up their toys and left the playground. And that was a mistake, as you heard me say every time. I did not believe the bull market was over. And we're still looking good. And in fact, we are looking for the next rampage, hopefully back to 111K. If we can get there soon, there will be a massive short squeeze, which could propel us further. So this is the approach. You wait to deploy. You wait for the right assets at the right time. There's always an opportunity that comes in. And a couple of rules of thumb. If you come into a big bag of cash, be patient. Set your layers. Have your cash ready to be deploy. Use DCA on steroids to stack. And think about as well rotation. If you have existing positions that you feel are running out of steam, we'll talk more about that too. Think about rotating into some other assets that are ready to spawn. We'll talk a bit more about horses in a second. This next question is from RST. Will large institutions switch back to ETH to generate returns and suppress Sol in the meantime, so that Ethereum first outperforms Bitcoin and Sol, then switches to Sol, and then finally returns to Bitcoin, playing the whole left turn, so to speak? This is a fascinating theory, and let me try and give you my perspective. I could be completely wrong. In fact, Mando and I have a wager on this over the next 3 months. It's which will outperform ETH or Sol. ETH has been doing very well, but I'm going to build an ETH valuation model for you in a second. And this question actually dovetails into the next question too. So it's like a two-part question from different people. But institutions, I believe, are rotating investments, but they're probably not even in Solana. But we had 14 days of positive inflows into the Ethereum ETF, which is massive. I do believe staking ETFs are coming, which will be a big afterburner for Ethereum. So those ETFs will be able to get an additional 3% return. And Solana will get their ETF with staking too. This is still expected 80% chance it's going to happen by October 2025. Now, the question is, what would happen? If TradFi could study the data and knew exactly what was in Sol versus ETH, that would be bonkers. We'll get to that in a second in the next question. But ETH is triggering maybe a mini AltSeason right now. I think if ETH gets above $2,700, let's check out the real-time price. Give me 1 second. ETH is 25.37. We need ETH to smash 2650, 2700 to get back up to around 4K. That would trigger a mini AltSeason. Not saying it's going to come, but that would happen. And then, of course, there'd be a big shift to Sol after the approval. The other part of your question was, would the money then rotate to ETH, then to Sol, then back to Bitcoin? I don't know. It is possible, though, that it will be a safe haven, but I think the investors that are in the alts, like ETH and Sol, are different investors than are in Bitcoin. And again, Bitcoin's a treasury game right now. So hope that helps. Now, the next question kind of dovetails into this. This is what I mean about the research. And if you break down the fundamentals of ETH versus Sol, Sol is more decentralized. It is 3,000% faster in block time. Finality is 15,300% faster. TPS 1.6 million% faster. 6,500% more daily transactions. 831% more daily users. The daily transaction per daily user is 603%. And the average fee is 501,000% less than Ethereum. This is just, this is like me comparing Sol to Cardano back in 2021. Exact same system, but now Ethereum has gone the way of Cardano. Not throwing any shade at Ethereum, but they're very different animals. And imagine you're racing a motorbike or a sports car or a yacht or something like this. Which boat would you pick, okay, in terms of cost, cost to maintain, your ability to get around the course fast, win a race? I think the answer is pretty clear. Now, if I used my traditional valuation metrics, price to sales, price to earnings, growth rates, met cash flow, staking yield, etc., Sol should have at least 7 to 8 times the market cap of ETH and not be trading at 0.25% of the market cap of ETH. Again, this is an example of how markets are irrational. All right. Nobody does the work. Nobody does the data, looks at the data, does the calculations that we do. So I think you just got to be patient. Anyway, there's more. There's more. This is, again, everything's kind of a little bit related. This has been a while since we've seen Coasty Boy. Last post was 11 months ago. Hi, James and team. Love all the data and insights you give the IA community. I'm 77. Woohoo. And I've been in crypto for 5 years. Woohoo. Legend. You've been through some storms too. I have Bitcoin, MicroStrategy, Sol, and Tesla. A question regarding Binance Wintermute. Can you expand on why they are suppressing the Sol price? What is the purpose and how long are they able to do this for? Cheers from New Zealand. Great question. And I know that Marty Party has been talking about this for a long time and others, but JC Freebie also had a question regarding this. Hi, James. As the Sol price is clearly artificially suppressed, does it really make sense to hold it, or would it make sense to sell and rotate into less manipulated winning assets like Tesla after a hard week? What price scenarios and probabilities do you see for Sol until the peak of the bull AG in October? Greetings from Denmark. Thank you for coming. So, as you saw in my previous slide, again, let me pop it up one more time. I think it was slide 27. Could be wrong. Boom. When you look at this data, okay, 2 assets compared. And I know the Lindy effect is in play. ETH has been around longer, yeah, and TradFi trusted more, yeah, and they got Vitalik, yeah. But it's getting a little bit extreme, okay? Just looking at the data, okay? Nothing else. Let's talk about why people would suppress. And again, there's a whole bunch of theories here, but I'm going to revert to people that are out there in the cryptoverse, as they say, people with opinions and people who have kind of studied different stuff. So this is Steve's rubbish. He said, all the while, Binance with Wintermute artificially keep the Solana price low because they can't compete in the real world. That is suggested as a motive. And then Exponential Tom, Binance is relenting in suppressing the Sol price. No wonder the asset has been underperforming. It has been clearly documented that Binance uses Wintermute as a market maker to bring the price of Sol down by selling a bunch of it in order to liquidate traders. This links the suppression to liquidation of perp futures traders. Then June 2nd, and these are all just in the past 3 or 4 days, by the way, from Crypto Tips 1, exchanges are suppressing Bitcoin, ETH, and Sol, while stocks are doing well. They're dumping via market maker Wintermute. They want to lower prices to liquidate long traders, again, reinforcing the liquidation motive of perp traders. And then Ryan Bethencourt, friend of the channel, looks like Binance had to do a little suppression again today to stop Solana flipping Binance. Again, the motive here is for Binance to maintain market dominance. All of these different things, just you know, thoughts from people out there. Now, if we look at other stuff here, a quick summary of why they would do that. Obviously, you know, to keep the biggest easy money for these market makers is to liquidate perp traders. We just saw James Wynn lose $100 million in 10 days. Boom. Guess why? Market makers went hunting, and that's how it works. And then stacking accumulation. There is a theory that I believe these market makers need to fill a bag, maybe in anticipation of the potential Sol ETF launch. So they need to get into a position, and they steal that from the perp traders and keep the price low so TradFi can get in cheap. I don't know. We'll see. Even people like Kathy Wood now are not talking about Solana. And then keeping the price low for the ETF, second piece, which ties into stacking accumulation for other reasons. And then maintaining Binance dominance. We don't know which reason exactly. Probably a combination of all of them. And remember, money incentivizes games. So don't be on the wrong end of these games, everybody. Allegedly. allegedly, just from stuff that I found. I've got my own perspective, and Marty on DCA every Monday talks at length about market manipulation. He tracks all the wallets, so follow him on X. Anyway, Rodaddy. Hi, James. I've been following you for a couple of years now. Because of you, I'm on the path to financial independence. Woohoo! Great. I'm 25% Tesla and 25% Bitcoin plus proxies. I'm wanting to increase my Tesla position. I currently have about 1,800 Tesla shares in various accounts, 800 of which are in a Roth IRA. I have 0 Tesla Leap options. In your opinion, would you sell 5 to 10% of the Tesla stock to purchase Leaps in a Roth IRA, since there are no tax implications? Thanks again to you and your team. So let's talk first of all about the advantage of Leaps. If you look at my Tesla position, it's pretty much half Leaps right now, so it's a pretty extreme. But again, one thing I do want to stress here before we get into the nitty gritty: buying Leaps on big dips is very, very powerful. But don't buy them at the top of the market, okay? When you see things like what happened last week, or when 5-6 weeks ago when Tesla was at 220, that's when you buy Leaps, or 140 or 160 or 106. That's when you buy Leaps. In fact, last time I remember giving an example of what I did. Tesla fell to $106, and I did something I never do. I bought Leaps 2 years out with 150 strike. I bought them so far out of the money, they cost literally nothing. But I knew the price was going to go back to all-time high of 500 within that same time frame. So it made sense to buy out of the money. But I normally don't buy out of the money Leaps. But again, when the price is completely crushed, then it makes sense to do so. Let's talk a bit about Leaps and why they are so important. One, you leverage with limited risk. It's only what you put down on the table. For every Leap you have, you control 100 shares of stocks with a fraction of the cost, depending on the volatility, of course, and your risk is capped at the premium paid. Also, it's time to be right, because Leaps have long expirations. You have time for the trade to go up, especially in this AI world with autonomy and humanoid robots coming out. You have all the time for your investment thesis to play out, which is essential for these macro-driven strategies as well. And it helps you and it gives you some strategic flexibility as well, because you can use these Leap put options as well to hedge long positions on Leap calls. Or you can sell calls against your in-the-money Leaps, which I do all the time. And this is a replacement for buying stock. And this is like synthetic long covered call strategy using options. And then you get your reduced theta decay. Your time decay theta is slower in Leaps. Okay, you buy, like I'm buying Leaps now that have, I bought one a few weeks ago. It had like 970 days to expiration, 1,000 days. We're talking 3 years almost. So yeah, they're very fun and they're very good for long positions. But let's look at your situation, your question. And the question is, would you do it? So I did the math, 1,800 shares at the current price, it's $540,000. Okay. The Tesla December 2027 Leap $300 strike costs $113. Okay. As of Friday. We are 921 days to expiration, and the cost per contract is $11,300. If you sold, there's the magic here. If you sold 10% of your bag, you'd have $54,000. You'd be able to buy 5 of these Leaps. You'd be selling 180 shares, which is 10% of your bag, but you'd add 500 shares in exposure. So nearly 3x more exposure, and your total exposure now is 2,100 shares. So would you do it? I normally wouldn't say yes, but at $113 for this $300 strike, your break even is $413 in 1,000 days. Go for it. And then you increase your exposure. And remember, we're going into an exponential time. I don't care if you love or hate Elon Musk or Tesla or whatever, you don't believe in it. That's up to you to do your research. But I've been studying this company every day since 2017. And I've never seen anything like it. So even their energy business alone, just the energy storage business justifies the market cap they have today. Think about that. Anywho, not financial advice. Options are risky. Make sure you understand, but that's what I would do. Anyway, Scubble. Would you be rotating MicroStrategy into Sol in AltSeason or concentrating on buying Tesla? God, the questions this week are fantastic. So my situation is different because I have A lot of MicroStrategy, and I'm also very cautious at this stage of the crypto bull run. I have my Solana position. I have my Bitcoin position. I have a monstrous MicroStrategy position. And as you know, I'm concentrated on pivoting to AI because of rotations. But let's look at historic AltSeasons. We don't have a lot of history, but March 1st, 2017, the AltSeason lasted 310 days, and Bitcoin dominance dropped from 96% to 36%. Okay. That is kind of crazy. That was the first ever AltSeason. And now people think maybe it's a pattern. The second AltSeason kicked off January 3rd, 2021, lasted 309 days. It's uncanny, literally 1 day apart in duration. And I can't remember Bitcoin dominance. I think it was about 75%, and it fell to about 38% or 40%, something like that. Anyway, the returns were crazy. 56,000% return on alts in the first AltSeason, 650% in the second AltSeason. Are we going to get a third one? I think the market's more mature. I think things are different. I think there's always an AltSeason to be had. It depends on the narrative and getting in early and getting out early, okay? Sometimes you'll have a narrative that's hot in the pot for, 6 or 8 weeks, and then it dies. And then you got to jump to the next narrative. So that's why I always talk every Tuesday about Okta. I look at the narratives, what's hot, what's not, because it's important to pop around. But are we going to get one this time? I think yes. I think, as I mentioned earlier, ETH could trigger a mini AltSeason, and the Sol ETF will definitely trigger some action there too, as well as more treasuries. So we shall see. Now, my rotation plan may be different to yours because my goals are not yours. I have an extremely leveraged, risky portfolio, and I'm trying to de-risk it. And I got that way because of some trades I made in the last bear market, which blew everything up absolutely out of proportion. So I want to rotate. My typical plan is always rotate out of underperforming assets or overvalued assets or things that are close to the top. I was thinking Pareto efficiency, things that are like 80% of the gains are in the bag. Then I'm taking profit with the profit-taking model, etc. And then I rotate into assets with strong growth potential. As we covered at the very beginning, I can't remember what the slide was. I'm going to pop it up again just to remind myself. I think it was slide 17 or 18. Hold on. Got to go way back in time. This one. Yeah. Slide 18. The per Bloomberg, or I call them Bloomberg, which are very TradFi, very conservative, and often spread FUD, allegedly. Did they believe, they also don't like Tesla. They believe Tesla will be the fastest growing profit grower over the next 5 years, and NVIDIA number 2. So position yourself for that play. Now, where would I come from? Where's the slide 38? My rotation plan is basically move from horses running out of steam to horses that are about to sprint. AI revolution will make that happen. Take profits on certain assets to lock in gains, take my money off the table, and de-risk. Okay, when I have certain positions that have blown up and skewed my entire portfolio, I need to reduce them. Okay, that's prudent financial risk management. And as you always hear me say, allocations matter. And I balance the portfolio allocations to maintain diversification, even though I'm very heavily concentrated in just 5 assets. So that's kind of my rotation plan. What yours is completely up to you. Are we going to get an AltSeason? History says so. I think so. Will it be like the past, 650% returns? I don't think so. Could it be a third of that, half of that? Yes, possible. Stay patient, my friends. And remember, cream floats to the top. All right. As we discovered today, Solana's beat to death. The fundamentals. If you value this like a traditional stock, it should be worth 8 times the market cap of ETH. And that's just the math. Don't shoot the messenger here. And a favorite part of the week. This is Philip, the manatee. Shout out if you have any Philip, the manatees in the audience. He loves canoes and follows them around all over the place and super friendly, but these things can sometimes get hurt and injured with fast traveling boats in Florida and other places. Anyway, shout out to Save the Manatees, and we're grateful to do that tomorrow morning as usual, 7:30 a.m. DCA live. Hope to have the full crew back. No more getting stuck at airports, Marty. And we'll have Mando and CTO and myself, and we'll we'll assemble the agenda later tonight. And thank you all for coming. I'm going to do some live questions right now from the team. And thank you once again to the mods in the chat. It's Sunday. No questions. Where are the questions at? Da, 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 da. Bing. Maybe my thing isn't working. Hold on a second. Yep. No questions. Hold on. This is weird. Okay, I got the questions, but they didn't show up in my app message. But I can read them from the phone. Hey, look at this. All right. Thank God we got a backup plan. All right, Doc Intern. Hello, my friend. Hello, Doc Intern. Oh, there they are. Now they came in. Even iMessage is crap. It's just nothing's working good anymore in traditional Mag 7 tech. It's bonkers. Anyway, Doc Intern, does the Elon DJT soap opera delay your MicroStrategy Tesla transition timeline at all? Well, if you saw my trades last week, you know it didn't. And I did buy heavy on Friday. I took advantage. I was waiting. I did a rotation earlier in the week, very small. It was like 0.5%. And I was, after the news broke on Thursday, was Thursday around, I think it was 1 o'clock or so, when everything went bonkers. I was actually in the car in the Cybertruck, and I was watching the Discord channel on Tesla, and I've never seen it move at 100 miles an hour. It was like one post every second. It was completely crazy. But no, I waited for the trend to turn on Friday, using the optimized trend to see if we were turning around, and we did, and then I jumped in. So no, doesn't change any plan. And what I've learned in life, these things are buying opportunities. And in fact, to quote Tom Lee and Dan Ives, they both said this is a buying opportunity. This is crazy. We are 4 days from the launch of Robotaxi, which will change transportation forever. I have FSD on 2 cars. I've been watching it progress for the last 3 years, 4 years. I was a beta user. It's incredible. It really is. It drives us everywhere. So is it real? Yeah. Is it going to be huge? Yeah. Stay patient, my friends. And Doc Intern again. By the way, I'm pretty sure I orange pilled my brother last night trying to get him to sign on his Patreon. Woohoo! Thank you, Doc Intern. Let me know his name as well. And also, Paul Poco. Rotation model, almost all is Tesla with smaller amounts of MicroStrategy and NVIDIA. What will the rotation model do as Tesla recovers? So it depends on the time frame, if you're on the daily or the 2 hour, or if you're in degen mode or not, and how bullish your price predictions are and what your current allocations are. It does all that thinking for you. If you shouldn't be all of anything, all of Tesla is not a good idea. And remember, you need to mix in a couple more assets. The more assets, the more powerful the model. 2 assets, yeah. 3, good. 4, better. 5, fantastic. Make sure they are uncorrelated, and make sure they're all high Sortino assets. Throw in a little HIMS, throw in a little Robinhood, throw in a little whatever you want, even AMD or something. But you don't want something like an NVIDIA. You want something completely different. So pick one winner per sector and let the model decide. That's what it's for. Let the data science guide you. From Paulie, if we get a Sol ETF this year, will you keep 50% of your Sol bag? Yeah, so I track the fundamentals, the data, the adoption, the transactions, the revenue, the dApps, the developers, every single day pretty much. It goes from strength to strength. So people thought, oh, Sui's going to kill Solana. Yeah, well, Solana has 6 million daily active users, and last time I checked, Sui fell from 1 million to 350,000 daily active users. So Sui is not the Sol killer right now. And anyway, with all the new stuff like Alpenglow, Fire Dancer, nothing can touch Solana. And the user experience is incredible. I dabbled actually with I went back to a MetaMask wallet after years and years. I hadn't been there since 2021. And I was still horrified how bad the experience is. I played with Hyperliquid, catastrophic. Just nothing like Solana. So UX is everything, and that drives adoption. So yeah, I might. The same thing, like my thesis, by the way, was to offload all of MicroStrategy. But now with all of the extra jujitsu they're doing, That's now a keeper for me. But I do need to balance. Just people always criticize Cathie Wood. Oh my God, she sold Tesla. No, her fund mandates once the bag size hits 10% of the portfolio, she has to reduce it to fit the rules of her portfolio. Okay. So if I'm 57% in one asset, I need to reduce that too. It's prudent. Okay. And I want to thank everybody. Thanks once again to the moderators. Thank you for your super sticker. Andy, Investing KO. Joseph Samuel, good to see you. Signal 103, Dog 1, Half Viking, GQ Trader, and Synthetic Dividend. I love that. I'm a synthetic long guy myself, and you're a synthetic dividend. Thank you, Sean Donnelly, T&D Tesla, Mr. BNAB, Mr. Piper up in Canada. And if anybody is in LA, I hope they are safe. Let me check on the Bitcoin price. 106,324. So it's hanging in there. But it could be a good night once Asia comes online in about 4 hours. Thank you all for coming. Have a great day. See you tomorrow morning. DC.